Hey, Focus fam, it's Focus Chan. Happy Wednesday. Hope you guys are trading well, doing good in this volatility, hopefully thriving a little bit. As always, guys, want to hop in, share my thoughts on the overall, and give you a few setups that I'll personally be watching to end the week strong. Let's dive right in. So one big thing, guys, the market dealing with right now, and is very, very vulnerable, is this daily cloud, something I'm going to continue to use. Every time this year, we've held the cloud on every dip, regardless of the reason. This time right now, we're getting a little vulnerable. We dropped towards that cloud last week, and we held the bottom of it pretty much for dear life. At that last second where we needed to turn around, we held. We popped right back up to our consolidation range, which is where we kind of flushed from prior, and we got rejected and destroyed here. We had a huge session on Tuesday and then a pretty desperate session today. Bulls trying their hardest, but getting stuffed and just hanging on for dear life. So I want to keep the market, guys, very simple, as always. As long as we are below this key zone above, right, we need to break back through this range that created the last flush. We popped to it, tried to hold, and then completely failed. So we're definitely in some trouble here. We hop in, guys, to my drawing set. These are the levels that I want to focus on right now. Let me get the right one. So coming into this week, we had higher lows forming off the bottom from last week, and we finally broke it here on Tuesday, pretty much signaling that reversal. Again, we rallied up to that prior consolidation, we broke down, and we're starting to bleed nicely. We stopped at a big zone yesterday, and then pretty much, guys, spent today chopping back and forth from zone to zone, as clean as it gets. We fall into it into the morning, pop to the top, we fall all the way back down, pop to the top, and we fall all the way back down. This is how you know if your charting is on the right path. But if we take a look, guys, for tomorrow, we do have to deal with quarterly expiration. So tomorrow is the end of the quarter, right? Kind of the last day here before the fresh quarter. Good old Q4 on the way. So we want to keep an eye on quarterly expirations. We definitely could see a little bit of chop tomorrow. And if we do chop, we are going to start to get some squeezes here for the market, which right now we're sitting very nicely in an hourly squeeze. So keep it simple, guys. If we look at last week's lows, that's simply what we want to target. Where if we start to fire the squeeze to the downside, when an ATR of 50 points, we're getting right back down towards that 4,300 range. Again, last Monday's lows here. That's our target to the downside. And if we start to break that, got some other key levels here, 4260 with 4224 as kind of that next pit stop. Where again, maybe we just squeeze. Maybe we continue to go from key level to key level to key level and key level. I'm fine with that. You buy low, you short high. You buy low, you short high. You buy low, you short high. Rinse and repeat. Plenty of money to be made as day traders in this madness because VIX is so high. But as long as we chop, guys, definitely be a little bit patient because once a direction is decided, it's going to be fun. We're either going to get that continued nasty breakdown, or we can start to pop hard and potentially start to squeeze some shorts. But all in all, guys, until we can start to get back through this key zone, call it 2477-ish, we need to push back to 4,400. But again, we're not really out of trouble, out of mud until we truly get through 4480-ish. So the market's definitely in a little bit of a vulnerable period. I don't care which way it goes, but I want to be prepared as always. So watch these levels, guys, to the downside. Watch this hourly squeeze. Watch quarterly expiration, and we'll see what the market does. Again, today just kind of held on, really couldn't make up its mind. So let's see what the squeeze can do. If we take a look at tech real quick, this is one, guys, that's definitely kind of dragging us down a little bit. If we take a look, they're already through last week's low and at very big levels here of 14,710. If we take a look intraday, just like ES, they had that trend line and they actually broke it first. They broke it on Monday, continued to bleed, and that caused ES to break it here on Tuesday. Love how tech's kind of dragging the market. So you guys can see they stopped right at that key zone today, right at that 14,710, hanging on for dear life. So again, keep it simple. If we take a look, we might have a little squeeze here at the lows. And yep, we do. So let's see if the squeeze fires us down to that next key zone, that 14,500, or if it can fire and pop us back to that other key zone, which is up here with the 50-day simple, right where we flushed from last time. Love these levels, guys. Market's very straightforward right now. Let it squeeze, let it break down and bleed. If we break the 710, we are in some trouble. Tech is going to drag the market. And if we look at YM, want to keep this one, guys, pretty basic, where I want to just focus on the flush range from last time, where we tried to get through the top of it, kind of being the best index, and then we quickly got back below the bottom of that range. And you can see today we tried to break back into it and failed. However, uh, you know, closed pretty decent, not too bad. So keep an eye on this one, guys. It can either, get back through this key level and start to drag the market back up with rotation, or if it continues to stay under it, we can get that bleed right back down to last week's lows. And you can keep an eye on that little trend line, see if that breaks. But I love this market setting up. And another thing here, guys, is VIX. Very, very important. Let me get this squeeze off here. But to start the week, we've held some really big levels of 18. We gapped above 18 and held 20. And we ripped to 25 on Tuesday, causing that huge drop. And now we just took a day off in the middle. So again, volatility is still looming. It's a dark cloud. It's undecisive. If VIX starts to head back towards 25 and break it, the market is going to take a really nice drop. Where if VIX to start to head back towards 20 and then break it and go to 18, the market's going to start a nice little rally. And then we'll see where it stops and we'll see what happens when VIX gets to 18. But watch these three levels, guys. Again, as long as it's above 20, we're a little bit vulnerable. Every pop is something that you could consider shorting, just like today. As long as VIX is at those levels, every pop is a really good short. Every pop is a really good short. Once VIX starts to go below 20, that's when these pops are going to actually continue. So keep a close eye, guys, on 20. And again, if we keep staying above 20 and get towards 25 and through it, then we're going to get a drop like we saw on Monday, where we just totally, back to the market, right? We totally just puke. So pay close attention, guys, to volatility. It's been an awesome, awesome compass. But to lay out a few quick setups, guys, one I really like here is Google. If we take a look at Google for the first time in a while, they're back at this daily cloud. Last time they were here, beginning of the year, they exploded. Got to it again and exploded. And now they're finally back at daily cloud. One little iffy thing about Google is it's finally under the 50-day simple, which like the cloud has been a while. We kind of started the year right at it. We held it here in March. We held it again in June, and now we're underneath it. So Google definitely feeling a little bit of pressure. But if they can start to hold this cloud, it could get interesting, or it could get really ugly. So let's talk about a few little levels here. So one level I want to focus on, guys, is right here at this daily cloud top, taking these two key wicks, pretty much calling that daily cloud top, not really going to have a clean level here, but it lets you know you're at the cloud. So let's dive in a little bit deeper. Today, Google dropped nicely to that zone and started to bottom. So I want to keep a close eye on Google, guys, where if it does start to hold and the market does start to turn, this is one where I love a dip buy off of that cloud. Looking to get back up this week towards point of control and up towards the 50-day simple, which sits up here around this 2780 range. So again, if Google can just hold this key zone and the market bounces, I love a long trade off of it. Right? It has a 50-point ATR, so 50 points gets you back up to kind of where these moves started, and then another 50 gets you to that point of control. So we'll see what happens, but if it does break this level, guys, it's got a really good chance of just dumping another 100 points possible from 2700 to 2600. This is also another name that is just super strong and now starting to roll over. So that is a little bit of a warning sign for technology, but very simply, guys, if they can hold this 2685 zone, that daily cloud, looking for a pop back up towards that 2730 through 2730, looking for 2780. Below this cloud, again, it could get very ugly. So look at some options. I want to keep an eye for calls on the 2750 calls. It's my favorite strike right now. And if it does get a little bit cheaper, the 2730s was offer really good risk reward. And then for the downside, guys, you can keep an eye on the 2600s. Google puts don't usually move as good as calls, but these are a nice liquid strike. And again, if we do, fall off a cliff here, those are going to get you in the money and get you some amazing returns. So keep a close eye on Google into end of week. The premiums move nicely. It's at a very pivotal point. It's going to have to make up its mind. Another setup, guys, is Moderna. Wedged up nicely last week and then just fell off a cliff. If we take a look at this one, they're gapping down to some very serious levels. They're stuck inside that daily cloud, and they're also stuck inside the 50-day simple, but they're holding good support. So this is one that you can look to play in both directions. I love setups that offer both sides. So if we take a look, it's starting a little bit of a squeeze here, which is expected, kind of putting in a double bottom on 375. So two ways to approach it, guys. If it starts at the lows, can consider a dip buy back up towards this key zone. Just like it's failed twice, you want to see if it fails there again, potentially switch to the short. Or manage your calls and see if we can continue to push towards 415-ish, back up towards the daily mean, back up towards this little gap fill. However, if it just continues to sit here and can't get back through this 396 range, it can dump pretty hard too. If you take a look at other vax names, BNTX, Pfizer, etc., they've all fallen pretty hard. So Moderna's also fallen hard, but very well could continue. So watch 375, guys. Again, it's a level you can risk off of to the upside. It needs to clear this 400 range to be safe, but can be a good dip buy up to it, and also a good level to short off of. Where if it doesn't make it there and it just breaks down, 375 to 362 is my first target. And then you got that 350 down below. ATR about 25 points. So you guys can see that 350 is about 29 points away. And then to the upside here, 27 to 25 points gets you filling that gap back to 406 range. So I like Moderna. Let's take a look at a few calls here and puts. So for upside, guys, want to keep an eye on the 400s. Those are really, really good strike right now. Really good volume, really good price point around $2. If it makes it, they're going to go from 2 to 10-ish. Love that risk reward. So 400s look really good. And you can even consider anything closer, 390s, 395s, 400s. And then to the downside, I really like the 360 puts right now. It's kind of that, perfect target. Where if we start here in short, 360 is your best friend. If for some reason we creep a little bit up and then short, keep an eye, guys, on the 370s and the 375s. Got a good options here on both sides of the chain. And then let's see, one more setup that I want to talk about, guys, is Square. This is a big name that's nearing a very big pivotal level, the 200-day simple moving average. Today was looking to see if it would hold it, and it did not hold it. So it's starting to break below some serious key levels. Want to keep a close eye on this one, guys, because something big always happens at the 200, where if it's under the 200, it's got a good chance of potentially getting dropped back down towards 232 to 225-ish range. However, if the market can start to pop and Square can start to recover the 200 right around 240, then I like a dip buy back up towards 248. So it's got a little bit of work to do. Or if it can't clear the 200, it can become a nice level to short off of. Where if it can start to bottom, market starts to push, and it can get through the 200. If you look at last time, guys, you can see sometimes you spend a little time underneath it, but when we reclaim it, there's accumulation. So give Square some time here. It's definitely breaking down, which is why, again, it could be a really good short as well, down towards 230-ish, 225, or recover and start to do a nice little pop here. Could go either way. And actually, one more setup, guys, I want to share is NVIDIA, because if the market crumbles, this is one of my favorites because it's breaking and firing a daily squeeze. It gapped below the 50 yesterday. Today, I wanted to keep an eye on if it could reject the 50 and offer a nice short opportunity. And it did exactly that. Opened at a beautiful zone, right? Again, broke the 50 yesterday, stuffed it over, before close, closed at the lows, gapped up at the market, reject, reject, reject. Beautiful short here on NVIDIA. So again, guys, this one's breaking down here. It's at the daily cloud. It's under the 50. Kind of looks like a Google. It's going to have to make up its mind. But right now, the daily squeeze is firing. So I don't want to get in the way of this thing. If it continues to stay below 205, I see 203 and then down near 200, which also gets you near the weekly mean. Really good levels in play. So we hop in here intraday, guys. Again, as long as they're under this 205-ish, 2010 range, they're very vulnerable of dumping towards 200, especially if the market starts to tread lower. That daily squeeze is going to fire. Has an ATR of about 6.5 points. So you can see, guys, getting to 200 is literally about an ATR, a very healthy move. So for NVIDIA, I want to keep an eye, guys, on these 200 puts, 202.5s, and 205s. NVIDIA is a pretty cheap name, so you can play pretty much right at the money and slightly out of it. I really think these 200s can offer some good risk reward if you can get a good entry with the market going lower. But that's my thoughts, guys. Again, we covered the indexes, we covered VIX, shared some Google, Moderna, NVIDIA, and Square setups. We got up, we got down. No bias, guys. As always, go out there, use this info, kick some butt, and finish the week strong. Appreciate your time. Thanks for listening.
Hey, Focus Chan here with Simpler Trading. Thank you guys so much for watching this video. If you enjoyed it, please make sure you like, comment, subscribe, turn on notifications so you don't miss anything that we do. And if you want to see us trade our money live in real time, go to simplertrading.com and you can sign up for more. But happy trading, guys. Stay focused. I'll talk to you in the next video.